Oh yeah. Oh yeah. Oh yeah. Oh yeah. I need to get some like unlicensed music. Right. All right. So let's get things going here. Let's get things going here. Wednesday, April 8th at 7:13. Nice and early. What is there to say other than hey, hey, we have peace. That's all that matters. Let's just hope these jerk offs or one of the jerk offs don't fuck it up. Iran or Israel, because BB's kind of a douchebag sometimes. He needs to fucking check his fucking ego too. So let's hope this. Let's just hope it lasts. I'm excited. I think it's all good. It's all good. And what I just can't stand though is like I just can't stand like you have all these people out there just like their whole fucking life is just hate, and I don't get it. I just don't get it. Like but you know what? I do got to get it. It sells, but so I guess that's what it is. So anyway, gold getting a massive rip. We are finally now up, and I'm looking at the 4 hour on gold. We are finally up into the area that I've been talking about. That if we are able to get up and break over here, we are showing some pretty good resistance now up at these higher levels here, 48.83s. But more importantly, going to see now how we hold up above this trend line. If this now becomes support, I think that's really a good positive case for gold remaining bullish going forward. However, just be aware there is going to be an enormous amount of resistance up at that big number back up at 5K. So, although we do have 200 plus points or so to get up there, just be aware of that there is some obstacles up there ahead, that it's not going to be just one big blast off. And so that's kind of the state of gold. And I like longs in gold. If I can bring up and we'll actually put this up there, because I'm really loving this Lux Algo. Again, not that I don't already know that this is the swing. The nice thing is that it's marked. Like, again, it's a mark that I would put on here myself. I would put this on here just so that I could visually represent areas of resistance. But I like longs down here, and it's kind of a tough spot because we haven't really made any interim lows because of this huge big candle, right? When you get big run-ups like this, you tend to lose those levels of engagement, again, like when you're talking about support and resistance. So that's kind of why we're in a bit of a pickle per se. But I kind of like R3 here today for a possible long if we get down. I mean, we did go and peak down below it about an hour and a half ago. That's the, That's the 30-minute. That was 6 o'clock this morning, so about an hour ago. Kind of missed it. I would have liked to seen that back at 6 o'clock. I mean, usually a second touch is not so good of a trade. But yeah, I mean, I do kind of like that, and I'm going to be, aware of the fact that, look, a second touch, we actually could get a little bit bigger and deeper of a retrace here. And there's not a hell of a lot on the profile to really, kind of grasp like, oh, hey, last time we were here, there were a lot of buyers. There were a lot of buyers from all the way up here, and we don't have much there. So right now, anyway, on the short term, and even as you grind in, it's going to get a little harder and harder kind of to find an area outside of right. I mean, there it is right there. Now it's showing. But that's where we kind of went this morning, possibly, maybe 4807s, maybe the bottom here. And we have been, unfortunately, stair-stepping down, though, all morning. So you got to be aware of that, too. Right? This is a 5-minute. All morning we've been stair-stepping. Do we make a level of support and go, well, we already did that, right? So I would want this to make another area of support before I jumped in long. And that's kind of about the story. So again, it's going to be all about the shorter. You're going to have to find or look on shorter time frames, and then look for shorter, quicker trades. It's not going to be, likely you're not going to get a retrace of that whole move from last night. We're slowly chopping away at that. And although I am overly bullish on gold right now, and I think the long trade is good. I mean, I have to be realistic too that we are kind of selling off a bit and giving back a lot, almost half of the move that we had. Is it? It's close to half that we had overnight. So halfway back from there. I mean, I could probably draw it. That's likely. But I would have to say, once we get into these highs from yesterday, which is about the 47, 46, 47.57, these are going to be the areas I think that you're going to want to kind of pull the trigger on, in my opinion, for longs. These are kind of the highest probability trades where you're going to get probably get the most movement, right? So anyway, that's kind of what I'm looking at. No trade right now in gold unless something changes or some headline hits. But more than likely, if that happens, I'm going to be too late. So we'll just get rid of that just so it confuse everybody. So we do have some areas, but again, when you get these big moves like that, it kind of negates a lot of if you're a pattern trader or you're looking for levels, kind of pulls those out. Also have a high volume node up here, 48.45. So we'll also see how we react on a move back up in this area. I'm just going to put an alert there because this could possibly be another area where, a short may actually be a nice setup there. And again, you're not looking for big moves on any of these areas. You're basically looking for, you're looking at risk. If you're doing a micro, the way I do it is you're looking at risk. I risk $25 on a micro on any, it doesn't matter what it is. I don't care what it is. If it's gold, if it's the Russell, if it's the NASDAQ. And, some people say, well, $25 sounds really, really tight. Yeah, it is. It is. And you should have tight stops because I firmly believe that if you use wider stops, especially on your first kind of trades, because you want to make sure you're in the right spot. You don't want to use a wide stop and then get stopped out and again, then miss an opportunity elsewhere. You want to make sure you're in the right spot. I mean, that's my philosophy. Now, everyone's got a different approach. You know, unless you're that confident in the levels, then maybe you widen the stop a bit. Right? If you're that confident in those levels, then you obviously widen the stop. But for trades like this, to me, I'm not risking a lot because I'm not risking a lot, and I'm looking for about a 4-to-1. I'm risking 25 to make 100. And with a $25 stop, I could take the trade a couple times. I could take it 2, 3 times, even 4 times, and risk 100, right? So, and to me, I would rather that than just hang in a trade that I'm gonna, you know, I might try it twice, get stopped down, be like, you know what, it ain't working for me. That spot's not the right spot, and then just call it a day, rather than sit in it at $100 stop and sit there at $100 stop and then waste all that time. You know, again, because time in trading is everything too. You know, don't let anybody kid you that, you know, the longer you stay in a trade and it doesn't go your way, you're forfeiting opportunity elsewhere that you could be trading to make money. And there's a lot to that. And I don't hear enough people talk about it because everyone talks about patience. Yeah, patience is fine in letting something work. But patience shouldn't mean that I'm just going to, you know, patience shouldn't mean that, oh, I'm just going to have a, you know, a $200, $300 stop. I'm going to be patient. No, that's being stupid with your time, because time really does have a money value to it. And I only know this from years doing this, that I used to do that, and I used to use wide stops, and I'd sit in trades sometimes for an hour, hour and a half, only to have it just bop me out. And I started to realize that there was some benefit to getting the hell out of the way and looking for another entry. And so anyway, again, that's just my philosophy. And, you know, it's not for everybody. It doesn't do good for the win rate, as I showed you, but it does maximize your risk exposure. All right, so anyway, that's kind of what's going on with gold. We continue to bounce from R3. So, you know, I would mark that as a pretty significant level today. And that's about all I have to say about gold today. We got a couple of spots. I'm not expecting a hell of a lot today. I mean, we are up big across the board. Dow's up over 1,200. ES is up about 186, 187. NASDAQ's up 850. The Russell's up almost 100. The Russell, if you look, the Russell's actually the best performer right now. And this thing has actually just been a beast overall. And I would have to say, and I know they were talking about it on Top Step TV, there was one trader that was saying that the Russell has been kind of the snitch on the rest of the markets. It's been kind of front running the other markets, and I kind of believe that. You know, so anyway, the Russell's really been really on fire here. And I don't really have any, there's really not, I mean, I have to go in deep. Let's actually take a look Actually, you know what? Let me look at the NASDAQ, 'cause everybody loves the NASDAQ. I'm trying to trade the NASDAQ more and more. We do have a bunch of resistance up here, as you can see. We're talking 25 249s, which would be the swing high from last night, which would be those highs. Also have this area up here, the 25 429s. So we are, even though we have had this huge run, we are getting into some areas of some pretty significant resistance, even as we get up here. 25 327s, big volume hole in here. And we do have some swing highs, 25 476. And then we get into some chunk up in the 25 600s. So that is a snap of the NASDAQ. And if we look at the daily and kind of go back, and then just clean this up a little bit, right? We have kind of this, you know, if I've seen this before too. I don't know if I can get it. Let me see. Is it in here? No, it's not a fib fan. It's something else. Let's see. It's what is it? I don't see it on here. I thought I did. I seen someone draw it out. I think it was Tim Knight. I think it was this. Was it this arch thing? Yeah, maybe it was this arch thing. Let's look at this. Let's see what this fucking bullshit does. Whoa, what the fuck is this? What the fuck is this? What is this? Oof. Oof, maybe not. I don't know. Let's see. Let's see. Maybe I got to put it down here. I don't fucking know, man. This stuff, man. You know, there's too many things to fucking play with on these things. I just saw this and I thought this was... No, that's not. Anyway, fuck that. Fuck that shit. I saw someone put like an arc in here, and it looked pretty cool. And they had this down. Basically, they had this as like a support down here, and then this big arc around here as like a resistance, and it looked cool. It looked cool. I don't know how the hell they did it. Maybe it was just a shape. Maybe it was just a simple shape that they used. I have no idea. It looked cool. It did look cool. It wasn't no trend angle. I don't know. Whatever it was, it looked cool. I'm not going to grill. But anyway, that's kind of what you got going on here on the daily. You know, looks like there were a lot of buyers down in here, right? Because we did rally, like even rally here. I mean, again, we have other things that are at stake. So, you know, you're going to want to draw some lines in the sand here, too, because it's not going to go up like this forever. Likely we're going to hit, you know, again, we've seen it on the other chart. There's going to be some spots where this thing runs into a wall, and we got to be prepared to take trades if it does indeed set up. And as you start drilling back, here's a 4-hour. And this is where this tool comes in great, these support and resistance deluxe algo, because you can see on the 4-hour, we start getting into, you know, here's our resistance line, which we're hitting now, right? We're trading at 219. And this is up at 25, I thought 40, yeah, 25 49s. And we're at 25 225s. So we're about 25 points off of the daily high here. And, you know, it is a resistance. You can see we have not been able to get through there the last few times we've been up there, even earlier back in March. So pretty significant area there. I would go out on a limb here and say if we continue to stay up in this area, it's likely when the market opens, we get another bit of a surge in there. Likely because I think if you have some folks who are short, right, they're going to have to come in and be forced to cover, which should kind of spike the market, and maybe we get through this area up here. Do I think it's a good spot to short if we just get through here? No, because I'm not going to fight. I'm not going to fight through that kind of momentum, because you're going to have a ton of momentum up there, and you need it to kind of exhaust itself. I mean, I'd be looking at 25 379s. If I was really looking for like a spot here on the NASDAQ to get short, it would be up in here. Up in here. Up here. About this 25 400 or so level. Just because I wouldn't want to get caught in any kind of momentum here where you're in a trade and it just kind of steamrolls you over. There is a ton of momentum here. I mean, and the Russell just went back up over 100. So we're kind of like rallying again here a little bit into the top of the hour. We got about 25 minutes to 8 o'clock. And so just be aware of that. So that's kind of what I'd be looking at. I'd be foolish to think that I'm going to trade anything else. I don't know if I'm not much of a buy a pullback trader, and I'm just not. I just really just don't. I just don't do that. I really, really don't. I very rarely do that, especially in equities. And so anyway, I don't know if I would actually be looking for, because again, how much more is this thing going to have? I mean, at some point, right, it's going to exhaust itself. And we had a pretty decent, I mean, look at this. There's some pretty decent levels here that we can trade in this range. We got these 25 244s, and then down here possibly 25 133. Big range though, but it is what it is. We're going to have that because that's kind of the movement we've been getting. We can see here too, as you kind of grind into the shorter time frames, this will actually, put in support and resistance levels based on those time frames. So, again, it's, areas that you're going to want to look at. And so that's what I would be, and that's on a 15-minute. And if we go into the 5-minute, it's probably going to be a little different, right? All right, so interesting. I'd highly advise you to use this. Again, if you're a support and resistance trader like myself, I'm finding it to be very, very convenient, because again, I would draw these lines on here myself, and the fact that I don't need to do that anymore is awesome. And here's the setup, just so you know. I use boxes and lines, and then in here, I use pivots. My swing sensibility is 10. I use zones. I think these are all standard, and then overlapping, I use merge. And I use show broken S&R and extend active S&R. And then these are all these other levels and these settings are all out of the box. And then you can change the support and resistance color. I know some people don't like to use red and green, so use something else, and that's it. And then as far as style, there's just a couple check boxes. I highly advise it. So anyway, that is kind of what's going on with the NASDAQ. So you definitely have some spots to take a peek at. And then let's move on over. Let's move over to the ES. It's going to look much the same as the others, right? Levels up here at 68.55, which I have marked already. As I was looking at these earlier this morning, and I put some levels on here. And then also a lot of resistance up here at these, let's see, where is that at? 69.02s. 69.02s. Right? For the ES, you're going to want to look at the 15-minute. Again, to get some not as distinct as the NASDAQ, especially on the upside, but to the downside, you do have 68.17s. And you could even, I would even put this area in here as well, which is about 68.27s. But that's not, probably show up on the 5-minute. Yep, shows up on the 5-minute. So, you might want to put that in as well, 58.27s, for a possible long there on the ES. Nothing showing up here. But, you could use your own judgment. You still have, this spot up here, right? I mean, which is really just not being marked on the indicator. If you move that sensitivity down, you likely get that, but I've been trying to avoid that because I don't want a whole slew of these things all over the place. And so anyway, that's on the level I'd be looking at today for a possible long, 68.27, 25s. And then again, down here, 68.18s. All right, and that is the ES. And then it wouldn't be prudent unless I did crude oil. This has just been, I don't even want to put this on here because, it's a freaking mess. But it has just been an absolute free fall. And now it's actually selling off again. Right now, we're down to 93. We did rally, though. We did get a hell of a bounce. We did get down to 91 and change. And we did have a nice bounce rally. And we've been sitting up in this 95 area almost all night. But it looks like right now we actually are selling off a bit again. I put this magic line in there last night, because that was those swing lows, and we've broken that, and we are down. We go here. I don't know if more news came out or what, but needless to say, crude oil is in free fall, and I am from the camp that although it's probably going to hurt me because I'm in a lot of energy stocks. I'm not even energy stocks. I'm in the two energy ETFs, the XLE and the XOP. And I'm pretty heavily invested in the XLE. I've been in that for a long time. It's not like it's something I just started doing through all this. I've been in that for a couple of years now, probably close to 5 years now. I've been buying that. That's part of my safe money. And although I know that's going to get hit, and that's actually off a bit today, and that's going to hurt me there, I hope they smash the living shit out of this. And I'm looking for crude oil to be freaking $70 by the end of the week. That's my call. I don't know if it's going to happen, but hey, if it does, that's awesome for me. Because I say smash this fucking thing to smithereens. I hope it just goes to fucking zero. So that is a good thing, and that's really it. To me, there's no... I can't trade this. I won't trade a market that's like this. I've learned my lesson a long time ago that, if you are going to play in this pond, you got to bring some ocean level balls to play in there, and to me, it's not worth it. Not that I wouldn't trade it at all. I mean, if I did anything in crude oil, I'd do a micro contract. And again, it would be something I'd just be looking to just bang a quick hitter. I wouldn't risk a lot of money. And I would feel like if I picked the right direction right now with a relatively decent stop, maybe risk 25 or $50 on a micro. And if you pick the right direction today and you make $100, call it a day and wrap it up with this product. And, consider yourself that you made the 50-50 chance and you were right. And if you were right the first time, just take it that, all right, you were right and that's it, and pack it up and go home. That's just my opinion, because you can't trade this the way this is. To me, you can't. And so I refuse, because, again, all you're doing here is you're just gambling. Like, I don't want to hear people say, oh, look, I went up here and you're fucking gambling. Because that's all this is. This is gambling. I mean, it's trending down. I mean, so that should be your bias. If you're going to buy, or try and buy bottoms here and then look for, rallies up, I just think you can get yourself caught in a bad quagmire where if you're going to get chopped. And again, like I said, if you pick the right spot, and you make money, just consider yourself lucky and go away. To me, that's the type of market crude oil is right now. And I just may do that today. I may just feel like, hey, look, I have to do it, and then be willing to walk away. If you're wrong, just be like, yep, all right, that was my contribution today. Don't chase it, man. Don't get into that. Don't get into that fury where you got to be right, and then you got to I got to get back to even, and then all of a sudden it's like, because I have seen crude oil wreck more crude oil and gold, more specifically, wreck more accounts by people chasing a bias, or just trying to either break even or win. And I don't know, to me, it's always like, and for me, gold and crude oil kind of go hand in hand. I'll trade gold a little more frequently than crude oil right now, because gold is actually moving pretty significantly. But normally when I trade either one of those, I'm looking for one trade in the day for either one of those products, if at all, and then I'm done. Like, I won't. If I take a trade and I lose, I'll be like, you know what, I wasn't right on that product today. Maybe I'll take a second shot on gold, but for crude oil, if I'm wrong, I just get out of the way. I don't chase it. So anyway, that's kind of what I see, and I would stay away from it. Bonds are having a good day. I kind of expected them to do better, to be honest. I really expected us to be up in the 115s, if not near these 116s. The fact that we're only we're close to the 115s, kind of expected us to be in about 115 range with this rally. But so that's kind of a big surprise to me. That's a big surprise, is I expected the bond move to be a little even stiffer. Now maybe we get a little bit more continuation when the market opens, but this move is a little disappointing. All right, and that is about it. You know, we're not going to talk about much of anything else because everything is just going ape shit. You know, and then we're going to actually go and look at stocks. And then I said I was going to put this on the stocks, and I'm digging like what this is doing for stock because this is Apple. And then if you look at this one on an hourly, I look at it, I'm looking at this and I'm saying, wow, this is great. You sell puts under, and I always look at the hourly or 4 hour on stocks. I very rarely look at anything shorter term on stocks because I don't really day trade stocks. I more swing trade and I do options. But I'm looking at this, you know, sell puts under 245 and less, and sell calls above 288. Perfect, right? Perfect. Netflix, another one. Sell puts under 90, possibly sell calls, you know what, 110, 120, probably 120 or better. So I'm kind of looking at this. I'm really digging this for that, for at least finding levels to trade. I'm still bearish on these. These are a piece of garbage. I actually may step in depending on how it is today. Let me take a look at the IGV. I'm going to take a look at this because I might actually short this again today. On this rally, we're up at 83 bucks. Yeah, I mean, to me, you know, this has definitely got some serious resistance up at 88, at 83 here. I could see myself putting in a short here, and I'm not going to do anything sophisticated. It's just going to be maybe a put calendar spread, you know, something like that. Put calendar. And that would be on the IGV, which is the software. It's some software. It's pretty big software ETF. It's the one a lot of the institutions and whatnot use. Yeah, I mean, so those are the stocks that I'm going to stick to. I'm still relatively bearish on Tesla, although it's having a pretty nice day. Today, I think you can sell calls above 420 and sell puts under 325. I like those areas. You know, if you want to be a little more conservative, go 450. But I think those areas are actually awesome to do right now. There's a lot of volatility inside Tesla as an underlying. And if you have stock, I think covered calls in Tesla right now are actually a great move because it's likely it's not going to have the snapbacks that it had in the past, and that's just my opinion. And I'm a shareholder, and I've been a shareholder for a decent amount of time, so that's coming from someone who's a shareholder. I just don't see it snapping back up. 400, high 400s anytime soon. Maybe not even till the end of the year, or even worse. So there's that on Tesla. The other one that I like in here that really doesn't get a lot of press, in my opinion, is Mongo. Now, Mongo went through a big consolidation. I mean, the thing was up at 400 bucks, and literally it's been cut in half, probably equal to Microsoft. It's kind of, and I think what's actually hurt them was their affiliation with Microsoft. It's just my opinion, and I think. You know, I don't know. I think going forward, though, I do think this is a good spot. And I have been accumulating a little bit of Mongo down here. I think this is a stock where you can sell some put spreads down below 230. in Mongo, or just buy the stock. But I always find it a little cheaper to sell the put spreads. But this is another one that I kind of like here through this. Now, I don't expect it to be a huge, big snapback either. But I do think this is a good spot and a good area for this stock. All right, that's as far as the biggies. Most of the others I'm really not messing around with. I already own Intel really cheap. I own it down in the $24 range. But Intel's been an absolute beast. An absolute beast. And short that at your own peril. But those are kind of the big stocks. I call them big tech. Those are the ones that I'm sticking with. And to a lesser extent, Broadcom having a bang up day. I'm actually long some Broadcom. I think if you didn't really get into it in the last couple of weeks, although it's been consolidating pretty heavily, I think yesterday's move higher, and you're going to get another leg up higher even today. I think you may have missed the boat. And now you just kind of have to wait and see if these levels in here turn out to be support. And, this thing could very, very easily ratchet back up in the $400 range. But that's another one that I like, but I don't want to say anything either because, I kind of think if you weren't in it already, you kind of missed the boat. And it wasn't an easy trade. I mean, I've been sitting in this one for a few months. I want to say at least a few months. I bought it back, I think after Christmas or even in January sometime, somewhere in here. And I was sitting on losses for a while. And I think yesterday's move pretty much brought me out of the red on it. And we'll see if it continues. I mean, if it doesn't, right, I'm going to be probably talking about how that trade sucked. But right now, it's actually, I think it's just a little bit above break even. But if that one's actually worked out well, and that's one I still think has some good wiggle room to kind of go a bit further as well. And then as far as the others, I got them grouped as AI. I think this whole sector is really going to continue to be in a lot of trouble, although we're going to have this many of them are going to get a nice bounce today. And I think if you are going to, mess around with any of these, as I've said before, the ones that I really like is I do like the URA, and I'm actually, I'm in this, and I own it. I think I'll be like at or near break even on it right now, but I've been kind of sucking hind tit on this one for a while through all this. But I think these two, which is the uranium ETF and CCJ, I think those two are going to reap the benefits of peace the most going forward. And I've been kind of playing that. And so I still think there's room in CCJ. And the nice thing about CCJ is I have this like trend line in here, and this thing has not broken this at all. It is just ridden this all the way the F up. Showed significant support when it did come and look like it was going to breach. And so, the trend is up here. And again, this is one that I think is really, really in a good spot right now. Unfortunately, it's up to 116. It was up to 135, so you do have a little bit of room for this to still go. Never want to buy anything on a huge up day like today anyway. But anyway, it's one to keep an eye on there. And yeah. And then the other one in this space, and I've mentioned it before, is NBIS. And I don't like NBIS for all the reasons everyone's who's plowing in bullish. I think NBIS is a great stock to sell iron condors, strangles. If you have the capital, I haven't done any strangles in it only because it's just too intensive. Like there's no margin break at all. Even if you have portfolio margin, you get so there's no margin break on it. So it kind of hits your margin balance pretty heavy if you do a strangle. So I've been doing wide iron condors, like $10 wides. And it's been working out. And I haven't been doing long-term ones. I've been doing short, under 45 days, iron condors. And I've been stacking them in my account, the iron condors, and they've been working out. And what I've been doing is I've been actually rolling the tested side and hanging on to the untested side. So when it was coming down and they were hitting it, I was rolling the puts out in time. So I would actually roll them from an under 45 day to an over 45 day option, usually the next month. So if I was in April, I'd roll out to May. And if I was getting hit on the other side, and I've done this, again, previously in the last months before, when it was getting up near the top of the range where I was rolling those. And it's been working out tremendously. It really has. I mean, it's really been a great strategy with this. And it's because the volatility in this stock has remained pretty decent for doing those trades. And so I highly recommend that if you're going to do something in here, you're selling calls above 135 and you're selling puts, at around, I would say around 80 is probably safe in here. About 80 at this point, we're at the level it's at. And if you're selling puts below that, you have a good opportunity, especially if it's under 45 days. I think you got a good opportunity to make some money in there, and that's kind of how I've been trading this because it's been working like a charm. And I'm one of those people where I'm stupid enough where if something's working, I'm gonna just keep doing it until it doesn't work anymore. And that's been a great way to trade this without just having a bias like, I'm just gonna get long and and go that route. So, and then last but not least, SMCI, it was a good buy down here if you were able to do that. To me, I just thought it was too risky. There's too much out there right now that any one headline now that's negative for this can really just punish this thing again. So I've stayed away. I feel like I'm very fortunate that I got out of it when I did. And I built my position and got out when I did because it literally like a week after that, it had the news that, they smuggled chips in or whatever it is they did. But I think this one's off the table for a while. I don't like to expose myself to that level of bullshit. And then the other one here is CoreWeave, and I have this area still marked out. And this is another one I think you can trade iron condors on and strangles, because although I just don't think you're going to get that oomph in these stocks like we've seen previously, because literally almost all these stocks, right, at one point in time it was like, there's some AI deal, right, and then it would hit and it was like, and the thing would go up 5-6 points the next day, and everybody be beating the table, and then a week later it's ground back down. Proof is right here in the charts, and then it would just grind back to where the hell it was, and then grind back to where the hell it was. and then grind back and grind back and grind back. And so, like, to me, it's like, so why even, unless you're just going to buy it down here, let it rally, and then get the out of the way, and don't be greedy and think it's going to go, it's going to one, right? Because the way people are, play the zone. Sell calls over 115, sell puts under 70. It's worked, folks. I mean, there it is. It's worked all the way back since November. So why fight it? That's another one, right? Sell puts or sell calls. Where the hell? I thought I put... Oh, wait, there it is. Where'd it go? Sell calls. Sell calls? Look at that. That's some high-tech shit right there. Sell puts. That's some high-tech bullshit right there. I can move it. There it goes. And then sell puts, right? That's it. Pretty simple shit. Yellow's good. So, yeah, sell calls, sell puts. That's it. And I had this zone now I've had this zone marked out since like late November. And so that's it. That's really all I got, here on stocks. Those are kind of the only things that I'm doing in stocks. I'm not really like loading the boat long on anything. There goes the NASDAQ. That's going up. That went up to the 45s. Let's see what happened there. That went up to the 45. So we did take out those highs. And honestly, again, I wouldn't. I wouldn't just short up here, because momentum could just bring you right through there and just run your ass over, man. Run your ass over. I mean, we did actually bop through it, and we did pull back from it. But, yeah, too much momentum. So that's it. That's all I got. I know I rambled a lot, too, but, hey, that's just where I'm at right now. And hope this helps.